The quiet ones are always the most dangerous. That's exactly what I'm thinking as I'm watching Webull Corp gap up like this, and honestly this feels like one of those moves that catches everyone off guard. Over 5.7 million shares traded, which is absolutely massive volume for this company. Something's brewing here, and I'm not sure the market has fully figured out what yet. Let me back up for a second because Webull's story is actually pretty wild when you dig into it. This company went public through a SPAC merger back in April, and on the very first day of trading, it exploded over 300%. 300%. That's not normal behavior for any stock, let alone a fintech company most people hadn't heard of. Now here's what's interesting. After that initial explosion, the stock came back down to earth pretty hard. Classic post-SPAC behavior, right? But this recent gap up has me wondering if we're seeing the beginning of round 2 for Webble. Sometimes the best opportunities come after everyone's forgotten about the initial hype. I was digging through their numbers earlier, and honestly, I'm kind of impressed with what I found. Q1 2025 revenue grew 32% year over year to $117 million. That's solid growth for any company, but especially for one that just went public. Customer assets are up 45% year over year too, which tells me people are actually using their platform and trusting them with more money. Here's what really caught my attention though. Webble isn't just another Robinhood clone. I mean, everyone's going to make that comparison because they're both commission-free trading apps, but they're actually targeting pretty different audiences. Robinhood is like the iPhone of trading apps. Super simple, anyone can use it. Webble is more like, I don't know, maybe a high-end Android phone. More features, more complexity, but way more powerful if you know what you're doing. And that's exactly why I think Webble has a shot at carving out a really valuable niche. While Robinhood is fighting for every new investor who wants to buy their first Tesla share, Webble is going after active traders who need real tools. Different markets, different economics, different growth potential. The timing for this gap up is pretty interesting too. We're in this weird environment where fintech stocks have been beaten up for months, but suddenly there's renewed interest in anything that can grow in a challenging market. Webull's 32% revenue growth in Q1 is the kind of number that makes investors sit up and pay attention. What's really fascinating is their global expansion strategy. Unlike a lot of US-focused fintech companies, Webble has been actively expanding internationally. That's huge because it means they're not just competing for a slice of the US market. They're going after the global retail trading opportunity. Most people probably don't realize how massive that opportunity is. I remember talking to a friend who works in international finance, and he mentioned how underserved a lot of international markets are when it comes to retail trading platforms. Everyone focuses on the US, but there are millions of potential traders around the world who don't have access to good platforms, he said. If Webble can crack that code, they could be sitting on something way bigger than anyone realizes. The crypto integration is another angle that has me intrigued. They're not just offering crypto trading as an afterthought. It's actually built into their core platform. With all the talk about crypto ETFs and mainstream adoption, having that infrastructure already in place could be a massive advantage. But let's talk about the elephant in the room, the volatility. This stock is absolutely wild, going from $13 to $55 to wherever it is now, gapping up and down on seemingly random news. This isn't for the faint of heart. I've been watching it trade, and it's like a bucking bronco sometimes. That volatility creates opportunity, though. There's definitely some short squeeze potential here, especially with all the retail interest and the relatively small float. When you've got a stock that can move 10 to 15% in a day on normal volume, imagine what happens when you get real momentum behind it. Speaking of momentum, I've been noticing more chatter about bull on social media lately. Not meme stock level hype, but definitely increased awareness. Sometimes that's all it takes for a stock like this to really take off. If retail traders start paying attention to the fundamentals, the growth, the international expansion, the advanced platform features, this could get interesting fast. One thing that keeps nagging at me is the market cap. At around $5.8 billion, Webble is still way smaller than Robinhood. Now, some of that discount is probably justified because they're newer and less established. But if you believe the fintech space is big enough for multiple winners and that Webull's targeting a different customer segment, then that valuation gap starts looking like opportunity. Actually, let me think about this differently. What if Webble isn't trying to be the next Robinhood? What if they're trying to be the next Interactive Brokers or TD Ameritrade, Platforms that serve serious traders with professional-grade tools, that's a totally different value proposition and potentially a much more profitable one. The economics make sense too. Active traders generate way more revenue per user than buy-and-hold investors. They trade more frequently, use more advanced features, pay for premium data, all stuff that Webble offers. If they can build a loyal base of active traders, the lifetime value of those customers could be enormous. I keep coming back to that Q1 earnings report because the numbers are actually pretty encouraging. Revenue up 32%, customer assets up 45%, and they're profitable. In this environment, profitable growth is like finding a unicorn. Most fintech companies are either growing fast and losing money, or making money but not growing. Webull seems to be doing both. The international expansion story is still in early innings too. They've got operations in several countries already, but there's so much more room to grow. Every new market they enter is essentially a new customer acquisition opportunity, and the platform scales pretty well across borders. Here's something that really has me excited: their technology focus. While other brokers are trying to bolt new features onto legacy systems, Webble built everything from scratch for the mobile generation. That means they can innovate faster, adapt quicker, and potentially offer features that older platforms just can't match. The gap up we just saw could be technical, could be fundamental, or could be early institutional interest ahead of some bigger news. Honestly, with a stock this volatile, it's hard to know for sure. But the fact that it happened on massive volume tells me this wasn't just random retail buying. Looking at the options activity, there's definitely some speculation about bigger moves coming. The option chain shows pretty heavy interest in both calls and puts, which usually means people are expecting volatility in both directions. That's exactly the kind of setup that can lead to explosive moves if sentiment shifts. What's interesting about Webble compared to other fintech stocks is that they're not dependent on any single revenue stream. They've got trading commissions, payment for order flow, interest income, premium subscriptions. It's pretty diversified for a company their size. That should provide some stability, even if one area gets pressured. The competitive landscape is heating up, though. Every major broker is trying to attract younger customers with better technology and lower fees. Charles Schwab, Fidelity, even traditional banks are all investing heavily in their digital platforms. Webble needs to keep innovating to stay ahead. But here's what gives me confidence in their strategy. They're not trying to be everything to everyone. They know who their target customer is, and they're building specifically for that person. Sometimes focus beats scale, especially in technology businesses. The global expansion angle is probably the most underappreciated part of their story. U.S. retail trading is pretty saturated, but international markets are still wide open. If Webble can establish themselves as the go-to platform for active retail traders globally, that's a massive addressable market. I've been trying to figure out what fair value for this company should be, and honestly, it's tough because they're in such a unique position. They're growing like a startup, but profitable like an established company. They're in fintech, but with a technology focus. They're US-based, but expanding globally. There aren't many good comparables. What I keep coming back to is the fundamentals. 32% revenue growth, profitable operations, expanding customer base, international opportunities. Those are the building blocks of a company that could be worth a lot more in a few years. The question is whether they can execute on the opportunity. The recent gap up might just be the market starting to recognize that potential, or it could be technical trading around options expiration. With this stock, you never really know. But given the fundamentals and the growth trajectory, I'm leaning toward this being the beginning of something bigger rather than just another random move. Obviously, this isn't financial advice, but when you see a profitable, growing fintech company with global ambitions trading at a reasonable valuation and starting to gap up on volume, that's the kind of setup that gets my attention. The volatility means it's not for everyone, but for people who can handle the ride, Webble looks pretty compelling right here.